Hello everybody, my name is Michael Quinn. I'm one of the directors of the Quinn Group. This month on Quintessential TV we'll be discussing personal liability of a trustee to tax on trust income. While not binding on the Commissioner of Taxation, law administration practice statements provide direction and assistance to tax officers on approaches to be taken in performing duties involved in the application of laws administered by the Commissioner, and therefore guidance to taxpayers on the law and practical administration of the tax system. While reliance on an administrative practice statement does not provide protection from tax shortfall, it does provide protection from false or misleading statement penalty and interest charges if the information in the if the information in the statement is incorrect. When considering the practical implications of the personal liability of a trustee to tax on the net income of a trust, this document, PSLA 2012-2, can be of assistance. It deals with personal liability of a trustee of a trust to a tax liability, whether debts of the trust or debts assessed to them on behalf of the trust, where there has been a change of trustee. It is the Commissioner's view that he, along with other creditors of the trustee, is entitled to be subrogated to the rights of a trustee to indemnify out of the trust. Therefore, even when a liability to tax is against a former trustee, the Commissioner's position is that he is still entitled to commence proceedings against the trustee and proceed to judgment and enforcement against the trustee's personal assets, and if that proves fruitless, seek to be subrogated to the trustee's right of indemnity against the trust property. In the Commissioner's view, it is the entity, i.e. the trustee, at the end of the relevant income tax year or tax period that has the tax-related liability for the period, even where there has been a change of trustee during or after the relevant income tax year or tax period. Because the net income of a trust for the purpose of Division 6 of Part 3 of the Income Tax Assessment Act can only be calculated at the end of an income tax year, it is only then that it becomes possible to determine all the assessable income and allowable deductions of the trust for that year. The Commissioner states this position is also consistent with the basic proposition under income tax law that a taxpayer's obligation to pay tax comes into existence on 30th of June of the year of income in which the income was derived. However, note should also be made of the personal liability of directors of corporate trustees where a withholding event has occurred under the director penalties regime. If you'd like to know more about personal liability of a trustee to tax on trust income, please contact us. You're welcome to email us at info@quinns.com.au. We'd love to get your feedback in relation to Quintessential TV, so please like, comment and subscribe. We look forward to seeing you all next month. I'm Michael Quinn. Bye for now.